Wanted to segment the crypto world. A magic quadrant would be you've got property, you've got currency, you've got platform, you've got application. The real world metaphor for that would be New York City. I give you $1 billion, Jamie, and you can buy $1 billion worth of land, like 6 blocks in New York City. I don't know what it would buy you today. It might not even buy you 1 block. It might not even buy you 1 block. Or you can buy $1 billion of a building, part of the Rockefeller Center. Or you can buy $1 billion of US dollars in a bank in New York City. Or you can invest in and buy $1 billion worth of companies in the buildings in New York. The companies are the applications. The $1 billion of US dollars is the currency. The building is the platform. The land is the property. Some people, if you have a lot of capital and you want to invest it for 100 years and you don't want to you can't own the currency, right? You know that's going to debase. That's going to inflate and lose its value at 10% a year or more. So you don't do that. Do I want to own the building? Do I want to own the companies, or do I want to own the land? Companies come and go. The building will be around for 50 to 100 years. And the land will be around for 1,000 years. They're just different business propositions. If you don't have a lot of capital.
All right, so this is where he starts talking about like how much money you have. But in case you're confused on the 4 types, okay, you have Bitcoin being property, being like the Manhattan block. You have something like Ethereum, which is the building that's on top of the block. Then you have, say, dApps like Uniswap that's within the building. And then you have a bank that's on that block, which is stablecoins. Okay, so he's breaking down 4 different types. Now, this is where it gets interesting.
If you have no money, when I started out in business, Jamie, I had $5,000 in a furniture loan. I started a business and I invented something. If you want to go from $5,000 to $1 billion, you need to start a company. You're on the application side. If you have $50 million, you can take the 50 million, borrow 500 million from the bank and buy a building. And that's the platform side. If you have $500 million or $1 billion, you might just buy the land and, wait. One is a more capital intensive strategy. They might all work, but they're for different types of investors. Now, one last risk spectrum I'll give you.
All right, and we'll stop right there. Michael does seem to be coughing a lot in this interview. I don't know why, but that's very interesting. Basically saying if you have no money or very little money and you're starting out and you want to make a whole bunch of money and you want to invest, you actually invest in the projects. The ones like Uniswap and the DEXs and DeFi projects. That's essentially what he's saying. If you have no money at all, right, and you want, then you would invest in one of those companies. Now, if you had a little bit more money and you wanted to invest, let's say, in the building or on the building itself or the building itself, then you would go with something more stable that is like Ethereum or Cardano or Solana or VeChain, one of these projects. The big caps, the ones that the companies are residing on, right? And if you had even more money than that, then basically you just go with something that you just really don't care about in terms of volatility day to day, something that's going to last for a very long time, and that is Bitcoin. So he actually breaks that down with a dollar amount. So I think that's kind of interesting. Let me continue on.
There are 4 types of investors. There are savers. Those are people that want to save money for 100 years and I want to give it to my grandchildren, or I want to endow a park to last forever. There are the investors. I want to invest in a company for 10 years. I'm going to buy Apple stock in 2010 and hold it for a decade because I think eventually people will like this iPhone thing. When you're an investor, you're betting on a portfolio of risk. You're taking risk. When you're a saver, you're converting weak assets to strong assets. I'm taking my dollars and I'm trading them for Bitcoin. I'm trading my bolivars in Venezuela for dollars. I'm trading my pesos for dollars, and maybe my dollars, if I don't want to buy Bitcoin, I trade my dollars for land, or my dollars for gold, or my dollars for collectible artwork or trophies or sports teams. I'm creating something which will not be debased by currency expansion. So savers have a long time horizon, they're risk adverse. Investors have a mid-time horizon, they take some risk. A trader is trying to guess, they're managing a portfolio of risk derivatives, first and second derivative of risk. Will Apple beat their numbers this quarter? Will the 10-year interest rate move faster than the 30-year interest rate? Is there more demand for Bitcoin in Tokyo right now than there is in Singapore right now? Right? You're trying to get in between two things, and you're arbitraging it because you're a trader. That's a shorter time preference. You have to have proprietary models, proprietary liquidity information, or a lifetime of interest, a lifetime of experience in that. And then the speculators, they're like, I went to Vegas, I bet on black, I won. I bet on Dogecoin because Elon Musk was going to go on Saturday Night Live. I thought it would go up. I thought it would go up between 3 p.m. and 5 p.m. on the day that he was going on. Maybe you can trade that, but maybe you're speculating that. If your MicroStrategy, our strategy is to acquire and hold Bitcoin. We're a property. All right,
I'm gonna stop right there. So I think not only do you have 4 types of crypto, but you have 4 types of traders, which makes a whole lot of sense. Hey, if you want to get rich quick, you're a speculator, you're a retail investor that is just FOMOing in because, like he said, perfect example. If you think Dogecoins go pump tomorrow, right, you can FOMO in, and it's 50-50. It's like betting on black or red, though black and red is not 50-50. It's more like 48-48 because there's greens. But you get my picture. I mean, you could win or you could lose out big, right? Then you have the traders, which, of course, there's a lot of people that are trying to trade, listening to a lot of other people that are telling you what the charts are saying. You can add a whole lot of stress to your life by trying to figure out day to day what Bitcoin is going to do, or altcoins, and try to trade it that way. Or you could be an investor, and there's 2 ways to invest, right? You can invest in altcoins and simply hold them, or you can invest even longer in something like Bitcoin, right? Because Bitcoin is the one that's going to last the longest. So, I think that's simple, but I like hearing that, because I think a lot of people, even myself, I think sometimes we group certain people into certain categories, and that's not true. There's a lot of different type of people. They get into crypto for different reasons, right? And I think, tribalism or people that's trying to protect their bags, they try to shame or talk down or bad about one group or another. Like traders will always say that holders are just, they're ridiculous. Why would you want to DCA when it's obvious it has to go down and so forth, right? And then holders also the same thing about traders. Like, hey, holding makes you more money in the end, so why would I want to trade? And then, you have the speculators that's getting into the meme coins, right? Like all sides is kind of like, kind of in a way attacking each other. But I guess people get into crypto for different reasons, right? People get in for different reasons. There are some that are looking to make money quick, and they're generally the ones that get hurt, the ones that get wrecked the fastest, and they leave the fastest. I believe that so many that came in at 60,000 plus for Bitcoin, they have all left now since Bitcoin is in the 30s. And the same thing, people that got in Ethereum at 4,000 have left. People that got in Doge in the 70s have left now that it's below 20, right? So a lot of speculators, I would say, got in, didn't understand what they were getting involved with. They got burned and they got out, right? Traders and holders, we're still here. Everyone's trying to figure out, I guess, what's the next move. But, for me, I agree with Michael. I rather have less stress, focus on the future. And I've been through a couple cycles, and I've seen this before, and I've seen Bitcoin go down. and down, and everyone gets nasty. Everyone tries to call everyone out, right? Trying to blame, divert blame everywhere else. But the ones that said, hey, I'm going to hold in DCA, they're the ones that came out the highest. They came out on top. And they're the ones that's laughing to the bank right now. So, I mean, that's the way I'm going to operate. That's the way I operate right now. And that's why I'm going to operate in the future. And hopefully you guys are joining me on that. Otherwise, you wouldn't be watching me on this channel. If you're looking for day-to-day trading, this is not the channel to be looking at.